Hey everyone, thought I'd do a weekly review early again because why not? And things are pretty dire right now. Uh, Deep sea of red everywhere, which is kind of good. We are at 88 devol and might do a 90 today because it smells of capitulation. And why I say this is because I was looking at the live data and we have some big prints for TQQ, SPXL, and where was it? UPRO. But it's not what you may think, because we had these prints on March 17th, all of them, March 17th, March 17th, and look at the number of shares. So for UPRO we have 2,212,100, and it was a number for trade 171 million. Now look at the number of shares here, 2,212,100, so exact same number of shares. Uh, and it's the same for TQQ, 6,691, 6,691, and SFXL, which had 2,473 and 2,473. So exact same number of shares and slightly less money. I think this was a stop loss that just got triggered. And if this position got stop lossed, very likely, and I think it's a stop loss because the reaction to this print was moving down, and it's across the board, the board obviously. So print was here, and we went lower, and we are still going lower, like it happened around here. I think we're seeing stop losses for the dip buys that happened in this area the past previous weeks. So you can imagine that most of the longs that came in here are underwater. Some of them are getting stop lossed or margin called. I don't know, maybe some of them are margin called. So it looks like we're heading towards capitulation today, which is sort of good. Uh, and we might get a 90 devol. Problem is we get this and might invalidate the 90 EU vol we're getting here. Like the two levels that are of interest. First one is the open of that day, because the open is important because when we most likely most institutional buyers bought the open. If they weren't already in, they bought the open here. So if we go below the open, they will potentially trigger stop losses for their position, like we did here for TQQ or SPXL, because we went below the entry level. Second level that is of importance is this the low of that day. Maybe some of them didn't get on the open, but we first went a bit lower and then recovered and went higher. So most entries in that day for those positions happen in this range. And I'll go back to the 30-minute chart. Let me use a different color. I'll make it orange. So most entries for that 90 UVol day that it was the bullish signal happened in this range most likely. So if we go below this level, we might trigger some stop losses and further get more liquidation, which will drive the price even lower. And really bad will be if we go below this level. Hopefully we don't, but we shall see. Why I'm still optimistic is the setup is we're end of quarter basically. Today is end of quarter. Oh no, Mondays, my bad. So we still have Monday for end of quarter. So yeah, today is not end of quarter. Uh, but we will be getting to end of quarter. Maybe we get today capitulation in which we go down today and we gap down again on Monday, maybe go to 545. Why I don't think we go that much lower is everything is still kind of bullish in a way, because I think I mentioned this like 2 weeks ago, made a list of things such as like the percentage of stock above the 20-day moving average, which is quite high right now, recovered nicely. And even if this goes down, it won't make a new low. And usually when we have a situation where SPY makes a new low while the percentage of stocks above 20 moving average is lower, then we usually make a bottom. Like for example here, like SPY was doing this while percentage of stocks above 20 moving average was doing this. So it can go lower, obviously. This will update tomorrow, it's not live. And I would expect it to drop, but it will not go lower while SPY goes lower. So that's why I kind of don't think we go below 545, something like that. It's difficult to believe, but maybe we gap up more. Like for example, uh, if we have a 2-day capitulation, I would expect on Monday to gap down. We open, we go even lower, and then recover intraday. That lower be having quite a wide range. Like I could even see us go like 3-4% down before the recovery. Like we gap down. Let's say we close here for the sake of argument, and we gap down another 1.5%. Let's say we gap down now 2% to 545, and then we continue down another 2%. What would that be? That's like 530-ish, something like that. So, and then we do a God candle that ends up closing green. And these are not that uncommon. Like we had it twice here. So this was close here, gap down, open down minus 135, and then went down to 394. The other one is gap down, how much? 254 and closed 165. Uh, Another one here, gap down 230 and closed 271. So this is the kind of the candle I would, or the setup I would like to see, the candle I would like to see going into the close. Meaning we seek some sort of capitulation. We go in this gap here. This is being defended. Inconclusive for now. But going back to the point about somewhat being bullish is that like stuff like the breadth indicators also, this will not go and make a new low. And same here, like SPY was going down and this was going up. And the SPY low came on a high here. So this will go lower, but it won't make a new low. And then we have this one, same type of behavior. This was making highs here, was going like that, while SPY was making lows. And this is true in general, not just for this one. Also have the McLaren oscillator, which is still positive. This will update end of day, so probably will be slightly negative, but we will not go lower than we were previously. So all of this combined with VIX as well, there is no way VIX makes a new high here, or even if it does, it will be no, there's no way it makes a new high. Like we're down 2%, VIX at 16. Let's say we know 20%, it will 25%, it will still be so market goes down another 2 to 3%, VIX will still be on a lower high. So when VIX makes lower high while the market makes lower low, it's a bullish sign. But again, remember that this is in the context of uh, potential for a capitulation kind of move down here, in which we go uh, to 545 or lower, something like that. We'll see. But if we go below 545, I would expect it to be a single day move down and recover by end of day, because things are just not that scary anymore, or they're not scary enough to justify this. And given the push down into end of quarter here, I would expect we get some sort of reversal on tariffs. It's gonna be a sell the news kind of thing with tariffs. Everything is already priced in. Equities dropped already, bonds rallied or dropped or whatever the fuck they're doing, and we have a good setup for a, I don't know, 1 2 day capitulation, meaning today and on Monday, then maybe a bottom on Tuesday and recover after that and keep going up afterwards. I still think we see a bigger rally later on. Was looking at the 2022 top, and it looks very similar to what we have now as a structure. Let's do it until here. So we have the structure, second top. We're missing this, or it was this bit here, which was a lower high. This was slightly higher. We did our first leg. We bounce feebly, like let's do like this. So we bounced roughly at the same percentage size. Then we needed a leg down, but eventually that big rally came, and this was a huge rally. Let's say, what's this? 535. This would be like the worst case scenario, which I mentioned previously. But we kind of get all the way to the back to the election gap, but I would say we will go something like this. So it's not in this, we went a bit lower than on the initial leg. So we did a feeble bounce, we're doing the retest of the lows, and then when we bounce, we should take this high out. So that makes the target a yearly open. That's my assumption. So I'm not really turning bearish. I know this today is super scary, but I honestly don't see that big of a reason to be bearish in this scenario. I would be more inclined toward dip buying than towards uh, going short. Like going short here is super stupid. Like even if we gap down on Monday and continue going down and go all the way to 530ish, 540ish, it's still a bad idea. Don't assume this will continue, in my opinion. But yeah, that's kind of it. So let's draw it out. We went all the way here. This area is supposed to be support, so I would expect that it will be slightly defended, maybe does a feeble bounce, not this one, but this one, the low of the day. So something like this. Question is what happens on, do we gap down or do we, if we got gap down, it's pretty scary. Like I would assume we gap down here. And like I said, continues lower a bit and then recover strongly and go back towards this. We'll see how we close as well. Now we recovered a bit. We were at 89, now at 87. But if we keep going down, we will see more liquidations or stop losses triggered from those positions that enter long here, especially in individual names, because individual names are kind of getting slaughtered, or at least some of them. Google getting slaughtered, Google made new lows, Amazon back at the lows, Microsoft back at the lows, Meta the same, Broadcom new lows, TSM new lows. So yeah, expect capitulation. We'll see how it goes and buy the dip Monday, Tuesday. Have a good one. Bye bye.